A journey towards professional excellence. 70 years of State Bank. After independence in 1947, Pakistan was inherited with a weak financial system architecture, lacking a proper banking network and a central bank. Mr. Zahid Hussain, one of the senior-most Muslim officers of the Indian Audit and Accounts Service, who was serving in Delhi as Pakistan's High Commission to India, was summoned in 1948 and assigned the charge of a special division for the creation of a central bank named State Bank of Pakistan. On 1st July 1948, Quaid-e-Azam Muhammad Ali Jinnah inaugurated the State Bank of Pakistan. Housed in Victoria Museum building, rented from the Karachi Municipal Corporation. Travelling especially from Ziyarat to Karachi against medical advice of his doctors indicated the importance that the Qaid had envisioned to this major milestone of the newly created country, an impact that it would imprint towards the successful journey of the new nation in the area of banking and finance.
The opening of the State Bank of Pakistan symbolizes the sovereignty of our state in the financial sphere. I need hardly dilate on the important role the State Bank will have to play in regulating the economic life of our country. Monetary policy of the bank will have a direct bearing on our trade and commerce, both inside Pakistan as well as with the outside world. And it is only to be desired that our policy should encourage maximum production and a free flow of trade.
Immediately after inception of the State Bank of Pakistan, the government of Pakistan issued a series of banknotes on emergency basis on 1st October 1948 with the help of Thomas de la Rue and Company of Great Britain and later by the Pakistan Security Printing Corporation established in 1949. For the banking system, out of 99 scheduled banks and 3,497 branches, only 13 banks and 631 branches were located in Pakistan. While all the 12 Indian banks transferred their headquarters from Pakistan to India, the Muslim-owned Australasia Bank, now Allied Bank in Lahore, remained. Despite extensive capital flight to India, two banks, namely Habib Bank and Muslim Commercial Bank, shifted their head offices from Bombay to Karachi and Calcutta to Dhaka respectively. From July 1, 1948, the Imperial Bank had been acting as an agent of State Bank for conducting business of central and provincial governments. However, State Bank, realizing the need for a commercial bank truly national in character and able to take over its agency function, replaced it with National Bank of Pakistan. National Bank was created on November 9, 1949 under National Bank of Pakistan Ordinance 1949 for the purpose. The promulgation of the State Bank of Pakistan Order of May 12, 1948, as well as the order for the amendment of the Pakistan Monetary System and Reserve Bank Order 1947, became the precursor for a more comprehensive legislation in the form of SBP Act 1956, enhancing the scope for banks' operations. Between 1948 and 1962, banking business in Pakistan was regulated by scattered pieces of legislation. However, the need for a comprehensive legislation was felt, and as a result, the Banking Companies Ordinance 1962 came into force. During the 60s and 70s, the banking sector of Pakistan, though flourishing, was marred by various structural issues, the primary one being the ownership structure. These structural issues led to an inequitable sectoral and geographical distribution of credit in the economy and a resultant increase in the concentration of credit. In this backdrop, State Bank embarked upon a comprehensive agenda of banking reforms in 1972. The reforms aimed at improving the soundness and efficiency of the banking system and purging it of malpractices. To cater to discrepancies related to credit allocation, bodies such as Agricultural Credit Advisory Committee and National Credit Consultative Council were created in 1972 and 1973 respectively. However, these reforms could not achieve their desired goals as they were not given enough time to materialize. They were soon followed by nationalization of the banking system in 1974. With the promulgation of Banks Nationalisation Act 1974, the federal government assumed exclusive right of ownership, management and control of the banks. A total of 14 banks that existed at that time were nationalized under the Act. A banking council was also set up to make policy recommendations to the federal government. The Banking Council prepared the Bank Amalgamation Scheme 1974, whereby 13 nationalized banks were amalgamated into 5 banks. However, these measures tended to take away the element of competition among banks. By the end of the 1980s, it became quite clear that the national socio-economic objectives sought under the nationalization process were not being met. By the end of 1989, a financial sector liberalization program was initiated to instill competition and switch over to market-based and efficient monetary and credit mechanism. Financial liberalization aimed at restructuring of banks, rationalization of branch network and introduction of policy reforms to encourage participation of the private sector in banking business. Besides strengthening banks and their regulations, liberalization of financial markets also took place. Interest rate structure was rationalized through removal of controls on lending and deposit rates. Moreover, measures were taken to follow a market-based foreign exchange market granting licenses to money changers in 1990 and allowing residents to open foreign currency accounts in 1991. The rupee was also made convertible on current international transactions in 1994.
So the world around us has been changing very dramatically. Therefore, other tools and other ways of doing things came in. For example, all indirect monetary tools have been introduced in Pakistan in the 1990s. And all the direct controls, credit targeting, interest rates which were suppressed from the market shocks, they have all been liberalized.
State Bank enjoys greater autonomy today. State Bank's autonomy was strengthened during the 1990s with various changes in legal framework governing the financial sector. As per amendments made in Banks Nationalisation Act 1974, in 1997, Pakistan Banking Council was dissolved. An exclusive right of the government and its corporations to establish a bank were withdrawn. Whereas amendments in BCO 1962 facilitated consolidation of SBP's supervisory role. More importantly, the SBP Act was amended in February 1994, giving full autonomy to the Board of Directors of the bank in all matters relating to administration and conduct of business of the bank within the provisions of SBP Act 1956. This act was amended again in 1997 to further enhance SBP's responsibilities.
The regulatory authorities or the law stipulates the independence of the central bank, but it depends a great deal on the individual itself. And we must ensure that the political establishment accepts and recognizes the importance of that independence. Although the independence of a central bank is now being questioned, whether it should be or should not. It's being politicized in many, many places.
The latest landmark in the journey of SBP autonomy is an independent monetary policy setting that is considered as key for effective monetary policy decisions. In 2015, an independent monetary policy committee empowered to make monetary policy and its allied decisions was established. Efforts were made during the 1980s for starting Sharia-based banking. However, a more focused but gradual approach for transformation of banking system into Sharia-compliant banking was adopted at the start of the millennium, wherein both Islamic and conventional banks were allowed to operate simultaneously in the country. This approach proved to be a success, as reflected by its significant growth. The turn of the millennia witnessed strong technological changes, leading to a sea change in the way financial transactions were carried out. With these advancements, electronic payment systems became critical for digital financial services. In 2001, SBP embarked upon a major IT automation program for implementing a world-class core banking system, leading to a transformation of the country's payment systems.
Important function that the central bank has is actually to be able to ensure that the payment system that flows from one part of the country to another, between the banks, between intermediaries, between public, that all is managed effectively. And currently we obviously have old systems, but I'm very happy to announce that effective 1st of July, we are launching real-time cross-settlement system.
The transformation of large value payment systems paved the way for digital retail payments in the country. Bank customers can now use internet banking to pay their bills and transfer funds across bank accounts with ease and convenience. Banking is no more restricted by brick and mortar. Branchless banking defines delivery of financial services outside conventional bank branches, often using agents and relying on information and communication technologies, typically through point-of-sales terminals or mobile phones. Pakistan is no exception to this change, and developments related to branchless banking started in the early 2000s. Since then, industry has been moving forward, expanding with persistent growth trends and spreading out across all areas of the country.
Now, talking about how digital money can go forward in Pakistan, 120 million mobile phones in Pakistan, 34 million phones with G3 and G4 capability. So you've gone into the common man. You know, this is, and 14% bank accounts, by the way. So you've got this instrument that will allow anyone in the country to hold money. As e-commerce develops, anyone can buy from anywhere else and have it delivered to his house. You know, our versions of Amazon, our versions of Alibaba, all those things will come. That basic, so that's all digital.
Financial inclusion is a powerful force for inclusive growth in countries, which empowers people to access a well-functioning financial system. In Pakistan, financial inclusion remains low. Recognizing the gaps leading to persistent financial exclusion, State Bank launched a comprehensive National Finance Inclusion Strategy (NFIS) in 2015, along with the government of Pakistan.
We only have 24% of the adult population having some kind of access to financial services or a bank account. Compared to other countries, even in the region and to the world, this is very, very worrying. All stakeholders, after a lot of consultations, have formed a national financial inclusion strategy. State Bank started with the action plan to increase financial inclusion. We, as also envisioned in our Vision 2020, plan to have at least 50% adult population financially inclusive by year 2020.
Expanding its facilities beyond export refinance, which was introduced in 1973, SBP now provides subsidized short-term and long-term refinance facilities to the development of priority sectors. Agriculture, being the backbone of Pakistan's economy, has been a top priority, with agricultural credit disbursements expected to hit Rs 1 trillion this year. Similarly, the policy of SME finance was launched by Prime Minister in December 2017 to enhance the share of SME finance to 17% of total private sector credit by 2020.
For the growth, we have identified 3 key sectors, which are the priority sectors, and which we think can directly and in the shortest possible time contribute to greater growth and more equitable and broad-based growth in the economy. The 3 sectors that have been identified are the low-cost housing, small and medium enterprises, and agriculture. We also have 2 cross-cutting themes, and the cross-cutting themes are Islamic banking and financial inclusion.
To achieve its statutory objectives, the State Bank developed its third strategic plan for 2016 to 2020 in 2015. Commonly known as SBP Vision 2020, the vision organizes activities around 6 strategic imperatives, including enhancing the effectiveness of monetary policy, strengthen the financial system stability regime, improve the efficiency, effectiveness, and fairness of the banking system, increase financial inclusion, develop modern and robust payment systems, and strengthen SBP's organizational efficiency and effectiveness. These strategic goals will fill the existing gaps and pave the way for preparing the bank and financial system as a whole for delivering next generation of services and foster economic growth of the country.
We work in an organization which is known for its autonomy, integrity, and professionalism. This has been achieved by the hard work, dedication, and commitment of our illustrious predecessors. SBP today has emerged as a strong institution which symbolizes our sovereignty and has been an anchor in providing stable financial and monetary system to the economy.